Hello and good morning, live from North Palm Beach. It's me, Kenny Polcari, your host of the party, and today is Friday, December 9th, 2022. And what is happening today? What's going on? Well, it's a big inflation day, right? The PPI numbers coming out at 8:30. But let's talk about what are the things you need to know. So yesterday, stocks did rally ahead of today's PPI report, right, which is expected to be weaker, and that's good. Oil trades all the way down to $71.30, but appears to have found some stability. Now, Gigi and the Crown Prince MBS have hammered out a deal showing Saudi support for China's future energy needs, and that's all positive. Meanwhile, Germany dismantles a wind farm in favor of what? Coal mining, because they need energy. And central banks are getting ready for their final 2022 commentary next week, and the markets are preparing. And what are we having for dinner tonight? Well, it is the fourth fish in the 7 fishes for Christmas Eve dinner, and this one is the Italian Filet of Sole. We'll get to that in a moment. So we tested trendline support at 39.30 on Wednesday. We held it again on Thursday, something I told you would be important for investor psyche. So traders, algos, and investors took that opportunity to go shopping for stocks that have been once again beaten up after 5 consecutive days of relentless selling triggered by concerns over what's next. What is the Fed going to do? Are they going to stick to their narrative? Is the recession going to be longer and deeper than the expectation? How high will unemployment go? What will be today's PPI? What will today's PPI reveal? What about next week's CPI, the Consumer Price Index? What will that say about the economy? And what will the Fed say next Wednesday? And what will the ECB, the European Central Bank, and the Bank of England say on Thursday? There are so many questions, and guess what? There are just as many answers, right? Which is what's causing the sometimes psychotic reaction by the algorithms. Look, in any event, yesterday was a good day. Stocks rallied ahead of today's all-important Producer Price Index report. Remember, the PPI addresses what manufacturers are paying for products that they need to produce the products that they ultimately sell to you and me. It is expected to show that those costs are coming down. PPI final demand year over year is expected to show a decline of 0.8%, which would leave it at 7.2%. Down from 8%, while the PPI ex food and energy year over year is also expected to decline by 0.8%, leaving it at 5.9%, down from 6.7%. Both very dramatic declines in the cost of manufacturing, and that's good. Month-over-month reports are expected to show slight increases. Final demand up 0.2, while final demand ex food and energy is also expected to rise by 0.2. At the end of the day, stocks enjoyed the company of buyers. The Dow gaining 185 points, or 0.5%. The S&P added 30 points, or 0.75%. The Nasdaq rallied by 123 points, or 1.1%. The Russell, the small cap index, added 12 points, or 0.6%, while the transports rallied 42 points, or just 0.3%. Now recall, it has been a tough 5 days for stock as investors try to reconcile comments made by Fed Chair J.J. Powell over just how high the Fed is willing to push rates and just how long the Fed will hold those rates higher. And that is what ignited the most recent declines, right? In the end, investors have now accepted the idea that the terminal rate is headed for 5.25%, and that JJ will hold it there until we see a significant decline in inflation. The concern was, and still is, that inflation will remain stubbornly high, causing the terminal rate to go even higher, something investors have not yet been keen to accept. Today's PPI report just might put some of that concern to bed, right, if it is what it is expected to be. But remember, the eco data continues to be uncertain and erratic, which is what causes the angst for investors in the markets, right? For instance, the most recent non-farm payroll report, right, last week was much stronger than what JJ wanted. It showed that the economy has been very resilient. It showed rising wages, and it showed that unemployment remains steady at 3.7%. Remember, the conversation is that unemployment is going to have to go north of 5+%. Some even say better than 6% before we see the complete elimination of inflation. And if that happens, it's going to be painful for a lot of people. Next week, we've got the Fed's FOMC, right? The Federal Open Market Committee meeting, right? That happens on Tuesday and Wednesday. It's a 2-day event. So at 2 p.m. on Wednesday, we're going to find out what the decision is. Now, look, 50 basis points is the call. No one expects it to be any different at all. So there's going to be no surprise there. The surprise will be what JJ says at the press conference. Will he maintain the higher and longer narrative, which is hawkish, or will he appear to change If both the PPI and the CPI are better than expected, then that would be considered dovish, right? That would be considered kind of a change in the narrative. Because if both those reports are softer, which would be better, then the expectation is for JJ to sound more dovish, something that I think is a mistake. But it is part of the reason that stocks did rally yesterday. In my opinion, no matter what the reports show, JJ needs to stop the back and forth. He needs to stop the dovish commentary. He needs to stick to the plan and stick to the narrative. He needs to remain very clear, leaving nothing to the imagination. At least not until we get to the end of the first quarter 2023, right, March, where it is widely expected that the Fed is going to pause, not pivot, just pause, just to see what the 9 rate hikes have accomplished, right? In my opinion, there should be no veering off course because we need to see now what these fairly aggressive 9 rate hikes will ultimately do as it makes its way through the system. But again, people hear what they want to hear. Dovish investors are going to try to hear dovish commentary, while the hawks are going to try to convince the trading public that nothing has changed. And that, folks, is what makes the market. Buyers and sellers, right? That's what makes it such a dynamic and energized market, is people have different opinions, and so therefore some people are buyers and some people are sellers. Now, what's the treasury market telling you? It ain't telling you that everything's coming up roses. That's for damn sure, right? The gap between the 2-year and the 10-year has grown. And that suggests more trouble ahead. The 2-year is now yielding 4.27%, while the 10-year is yielding 3.47%, leaving the gap at 80 basis points, which is up from 25 basis points only a couple of weeks ago. And that growing gap suggests that not only is a recession coming, but the market expects it to be deeper than what some analysts and strategists expect it to be. So again, we've got conflicting data, which is why I say the Fed needs to err on the side of being more hawkish. Stop giving hope to investors when it's still unclear where we're going. Because look, they went way too long, even when the CPI shot up and through 2% in April of 2021. Remember the don't worry, it's transitory conversation? Remember how they kept rates at 0 and kept buying bonds even as inflation shot up and through 9%? While they kept telling us, don't worry, we got it. Even as so many strategists and analysts, myself included, were screaming, stop! Do you remember those conversations? Well, guess what? Now we have the same situation, the same issue, just on the other side, right? Now, instead of stimulating, we're worried about tightening, which is why they need to stay the course and raise rates as expected until March. And then they can pause, just like they said they would. Remember, if they over-tighten, then they can begin the feigned pivot and cut rates. And if April shows that inflation is not responding as expected, then they're going to have another decision to make. Do they wait longer to see what happens, or do they start raising rates again? And that, my friends, is going to be the question. But we're not going to know the answer to that until we get closer into, halfway through the first quarter of 2023. Next up is oil, and what a couple of weeks it has been for oil. First, we had the threat of Saudis going to make additional cuts to production, sending prices up, and that proved to be false. They did not do that after Joey gave complete immunity to the Crown Prince over the killing of Khashoggi, right? And that helped to ignite the decline in prices. But we also had the European ban on Russian oil and the G7 price cap on Russian seaborne oil, which should have helped support the price of oil, but that did neither. The Europeans are getting more oil from the U.S. and Norway, and the imminent disaster that everybody thought was going to happen hasn't happened yet. But it's still early in the game. Winter has just begun, and Vlad remains the wild card here, right? So no one knows what's up his sleeve next, right? What's he got planned? If it doesn't work out the way he wants, what's his next move to shock the markets? And then we all saw those incredible demonstrations in China. The Chinese people have finally gotten tired of being locked down and welded into their own homes. And while that's sure to cause pain for some, the ones that got caught protesting, it apparently caused Xi to reconsider and begin to relax the very strict zero COVID policies which have been in place, which should cause oil to rally as that reduced demand narrative is about to be turned on its head. Because if China opens up, then it's all about the demand story all over again. This morning, oil is up 63 cents or 0.9%, trading at $72.10 a barrel. Look, China right, telling Bloomberg this morning that they welcome the role that Saudi Arabia is playing in balancing the global oil markets and are grateful for them being a reliable major exporter of crude to China. This comes after Gigi met with the Crown Prince, and so therefore that's the latest news on oil between China and OPEC and the Saudis. Oil dropped 22% from early November, right? It found its low at 71.32 a barrel, breaking that September low of 74.98, something that everyone welcomed. But this morning, the chatter is all about how oil is overdone to the downside, is expected to find stability right here, and it is. In the end, calls for $100 barrel of oil are still alive and well as we move through the winter into the new year. This morning, U.S. futures are up, right? Ahead of what's expected to be a better than expected PPI report due out in about 2 hours. Dow futures are up 50, S&Ps are up 12, the Nasdaq's ahead by 50, the Russell's up 6. Now, if the PPI comes in as expected, then watch as the algos go into overdrive, sending stocks higher. The recent sell-off offering lots of opportunities for investors looking beyond 1 week, right? Or is it? I think yes. You might think no, but again, that's what makes a market, both buyers and sellers. I have one opinion, you have another opinion. I'm a buyer, you're a seller. I'm a seller, you're a buyer. It is what it is, and that's what makes the market so dynamic. In addition to the PPI report, we're also going to get the University of Michigan surveys, and the sentiment is expected to be at 57. That's up from 56.8. Not a major move, but it is higher. One-year inflation expectations are expected to be 4.9%, in line with last month. Look at that. The sun is coming out just as I'm talking about this, so I probably got lost in this picture, but you can still hear me. European markets are all up by 0.25%. The China chatter helping to drive the move, along with the economic outlook and expectations for what the central banks are going to say next week. Remember, we're in the final weeks of 2022. Unless we have a dramatic sell-off, which I think is unlikely, no one is making any drastic changes to their portfolios now. The Santa rally that usually happens is still expected to happen, taking the S&P back to the 4,000, 4,100-ish range by the end of the year. The S&P yesterday closed at 39.63 after testing support at 39.30, right? Which I told you had to happen, and it did, at least for now. Futures actions this morning is going to take us up to kiss S&P 4,000 at the opening bell. And like I said, if the PPI report is better than even what we expect, then a surge up and through 4,000 to challenge a trend line of resistance at 40.40 would be in line. And if any of the investment banks chime in, think Goldman, because they're a Fed mouthpiece, and say we won, then all bets are off as the algos will go hyperbolic, which is why you need to stay the course. You need to stay invested. You don't make emotional decisions, and you continue with the plan. Okay, so what are we having for dinner tonight? So this is the fourth recipe in the 7 fishes that we have that an Italian household would have on Christmas Eve. This one is Filet of Sole. It's a rather simple dish to make, but it's a personal favorite of mine, and it will become a personal favorite of yours, right? You can't substitute this one out if you don't want to. Because I'm going to give you more than 7 dishes, but you can substitute some out, but not this one. For this, you need filet of sole, you need eggs, Italian-style breadcrumbs, which I'll give you the recipe for. You need flour, olive oil, and of course, you're going to need tartar sauce. Beat 6 eggs in a large bowl to make like an egg wash. Set that aside. Place flour on a separate plate. Put that aside. Take the Italian-style breadcrumbs also in a separate bowl and put that aside. Now you're going to make the production line. The flour, then the eggs, and then the breadcrumbs. Next, you're going to take the filet of sole piece, you're going to dredge it in the flour, you're going to shake off any excess flour, then introduce it into the egg wash, then take it out of the egg wash and put it on the plate with the breadcrumbs. Using a fork, make sure that you cover the filet on both sides, turn it over, press it into the breadcrumbs. Then you want to take that and just put it on a clean plate and then repeat until you have breaded all the fish. Now, next you want to turn your oven on to broil and pour olive oil into a broiling pan, maybe like 1/8 of an inch in the pan. You don't want it to be, you don't want it to be an ocean of oil, but enough that you're gonna the fillets are gonna be able to sit in the oil. You're gonna heat the oil under the broil. Be careful to watch this as the oil gets hot. You need to make sure you're ready to broil the filet, right? Do not walk away. The oil will burst in the flames if you're not paying attention. I'm not trying to scare you. I'm just saying, pay Pay attention. Now, when you think it's ready, take a pinch of the breadcrumbs and toss it into the oil. Do they sizzle? Because you want them to sizzle, right? If they do, then the pan is ready. Now, take the filet with a fork, put it in the oil, flip it over so that you've got oil on both sides. Do that until you fill up the pan, then put it under the broiler, let them come to a nice golden brown. When they have, using a spatula, flip them over to the other side and let the other side cook to a nice golden brown. Once they're brown, remove it and place it on a serving platter to join the other fish dishes on your Christmas Eve buffet, making sure to have tartar sauce on the side to go with this dish. And look, if there's any leftovers, get ready because they make great filet of fish sandwiches the next day. You want to make sure you use toasted Italian bread, melt some provolone cheese on it, put a bit of tartar sauce. Oh my God, so yummy. Okay, now for the homemade Italian breadcrumbs. In a food processor, you want to blend a bag of hamburger rolls or hot dog rolls and transfer that to a big bowl after you blend them. You want to add pepper, a little bit of salt, because you're also going to add cheese, and cheese is salty. You need onion powder, garlic powder, parsley for color. Now, the key ingredient here is going to be 3 or 4 handfuls of grated pecorino romano or parmigiana cheese, or you can use a combination of both. You can use one or the other. You want to mix it well. Now you want to set it aside. Those are done. You can use these breadcrumbs on so many dishes, but that's for another day. Look, the sun's starting to come up. It's going behind the clouds. It's peeking its head out. It looks like it wants to be a sunny day today, and I think it's going to be. Right now, it's about 78 degrees. It's going to go up to a beautiful, balmy 82 by midday, and it's going to be another great day here in South Florida. Have a great weekend, and until next time, take good care.